Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. We're coming from the Rick and Dawn Family Innovation Studios here in the Duquesne School of Business. Well, the building Duquesne Hall in the GW School of Business, excuse me. Next up today, we're going to be talking about Google. So another top holding in our portfolio, Google, and I'm sure you've heard of it. The parent company is Alphabet, so we'll use those interchangeably today. Reminder, disclaimer, this is not investment advice. This is for entertainment purposes and educational purposes only. All right, with that out of the way. Again, Google is one of the largest holdings for the GW Investment Institute. So that's what we've been tackling as we get started on our podcast. And thank you for tuning in for those coming back. And thanks for those who are joining more recently. As you may know, that we're going to talk about this company through the lens, if you've been watching, of the GW Investment Institute framework. That is business, management, price valuation, and balance sheet. So those are the four components. This is not going to be a deep dive for today's episode. What we're going to do is hit each of those components and talk a little bit about that. I'm sure everyone has heard of Google and uses Google possibly on an everyday basis, but it's a larger holding in our portfolio. So we're going to talk about it. And, we're certainly asking our analysts to think about, well, how should we think about Google moving forward? And we're going to, think through that for when we especially get into the business here. So let's actually get a few specs on Google to start with. So I think most people know what they do as far as the business goes. They interact with it possibly on a daily basis. And where do they make most of their money is through search and advertising from that. And so the market cap is a $2 trillion company. So it makes it one of the largest market cap companies in the world. But it's still basically a search business. Now they have other businesses to speak of. Probably the other most well-known is YouTube, which they acquired for $1 billion. And really everything else now is kind of secondary to that. They have some of these moonshot projects. They have Google X and the ventures that they talk about. Waymo is part of that collection. But really nothing has come out of there, certainly that's as consequential as their search. Now, something that's embedded in there is this DeepMind, which they acquired years ago. And they created the transformer in the ChatGPT world. But they were not the first to sort of materialize or turn that into something that's marketable as ChatGPT did and OpenAI did with ChatGPT. So the business, it is search. That's still the principal business. There's a collection of other things. YouTube would be the other big piece to talk about in there. But really, and this is where people get concerned about the business, is that, well, is it over-reliant on an old business that has been a home run since it went public in the late 90s and has really crushed it? And so the business has been great. Let's get into some of the things here and characteristics about the current business. As we mentioned, the business is, the market cap for the business, as we sit here close to the end of October in 2024, you're talking about a $2 trillion market cap. And so, again, one of the largest market caps. But let's talk about the revenue. So what kind of revenue does it generate? $328 billion as of June 30 for the last 12 months. And so obviously makes it a very large company on the revenue side. And the revenues grew about 13%. So for this type of company, for such a large company, that's not necessarily a bad number. And then when you look forward, some of the projections, the consensus is at least that it will actually decline through the year end here. And so obviously that's putting some downward pressure, which we're going to talk about that on the valuation side. But when we talk about margins, this is the tech business. So you have gross margins that are 57% here. So that is obviously a fantastic gross margin in general. And when you talk about the net margins, you're talking 27%. So not, NVIDIA current gross margins, but very good gross margins for the business. And it's also generating, $60 billion in free cash flow. So also very good there. So this is a good collection of metrics to describe this business. And these metrics are very favorable for this business. Now, why are people might be concerned about Google right now, or Alphabet, the parent company, but we'll use the names interchangeably, as I mentioned, and sometimes I'll just talk about it as Google. Search is still the main driver on the business. So if you're concerned that the AI world is going to start taking over, and specifically if you're thinking about OpenAI and their ability to do search as opposed to Google, are people actually going to migrate? Bing, people, I think there are some people that use Bing. I'm not sure, but I think they're out there. So are these other types of ways to search using AI? And so when you talk about ChatGPT or Anthropic with Claude, are they going to make a dent in this business? Time will tell. And so far, that has not really happened. And Google really still dominates this, really a monopoly within search. And they talk about we're not a search company, it's an advertising company, and we own a small piece of that. But in search, they dominate this and they own this. But people are concerned because AI is chipping away at the heels of this market dominance. When Buffett talks about the moat, you can see people making dents in this moat, people making a little bit of progress in here. And so I think it's a legitimate concern when you talk about this. All right. So when we talk about, where can the business go? Well, they have their own answer in the form of Gemini and AI. And so as everyone is talking about, AI is everything. And so their searches are now being powered by Gemini. And if you type in the searches, now you get this sort of Gemini set up at the top of the bar there, or the top of the page rather. And so they're definitely incorporating that. You can use Gemini in a variety of different ways to create images. They have a paid version, just like they do on OpenAI for ChatGPT. And so you can pay a monthly subscription, and then that gets incorporated into your Google Docs, Google Sheets, and sort of their Office suite of products that they have. And so that can be a good thing. Now, is that going to translate into being, people being stickier and using their Office setup, or being stickier and continuing to use their search where they still dominate on the advertising revenue side? Again, I think this is something that you have to watch for and be very aware of, because that landscape is changing quickly and people are deploying a lot of money to disrupt this, business overall, not specifically to the search, but just disrupting sort of the way that we're doing things and how do we become more efficient, and search being part of that. Is there a better way to do it such that you don't get a list of random things, you get a very curated response back to the exact things you want, and they're obviously working on that too. Again, with Gemini, it was first called Google Bard, and now it's Gemini. And so they're absolutely making progress there. Can they keep up? That's a big question. Another big part of the business is cloud. So, you talk about Microsoft Azure, a big player, and of course, the person who led that, or the company who led that, AWS. And so, but you have big players in there, and now Google Cloud is a big player. So when you talk about the big providers, you're talking about Microsoft now with Microsoft Azure, sort of the old stay AWS, which had, again, that 7-year lead that we've mentioned before. And now you have Google Cloud and also Oracle. And so, when you look at sort of maybe the large government contracts that have been awarded, those are the 4 players that you see. And so they've made a lot of progress there. Is it enough to be a meaningful part of the business? Yes, right now. But is it, still subservient to search? Yes. But it's an important piece, and they'll continue to grow that business. And I think that in the short term, at least in the medium term, that looks likely that as people move things from on-prem, as they call it, and premises to the cloud, that'll continue to be an important part of the business. And I think that's a positive for them. But really incorporating the AI as part of their setup is going to be super important. All right. So now, let's move on to management. We'll come back on the business. But while we're here, let's give a score. So when we're talking about this, we go 1 to 10, 10 being the best. This is probably right now a 7. And I would say a 7 because, and you could say an 8 depending, but because there is sort of some idea that people are chipping away at their dominance. And I think that's legitimate. And I think you should be concerned about that. And we are thinking about that, and we're asking our analysts to consider this and how is this likely to play out. So I think that's a 7. Now, management. So you had, the founders, Larry Page and Sergey Brin, running this company. They brought in Eric Schmidt long ago, and then Larry Page took over as CEO. And so, but now you've had a shift now to Sundar Pichai, who's running the business, and so a non-founder CEO that's in there now. And Eric Schmidt was a non-founder, but was in really early, so kind of the second wave of founder, you kind of call him, and really took the business from an idea and a really clever setup to a proper business when Eric Schmidt was there. And then Larry Page took it back over. But now you have a non-founder CEO that's in there, and they've been prioritizing AI. Time will tell to see how this works out. He seems like he's doing a reasonably good job in this. This is obviously a big job to do, to take over a company when you still have the founders around. And, again, time will tell. The focus on AI, I think, is deserved, and it seems that that's the way they're going. I think part of the criticism that people have on not just Sundar here, but is around how quickly that they are moving with AI, and is that they are not moving quickly enough. And so, they developed the transformer there. They had DeepMind pretty early. They didn't commercialize a lot of this, and you saw then ChatGPT come in and kind of steal their thunder, and really get this market started, and has been sort of the topic du jour when we talk about AI and the large language models in particular, that Google was really there first. So why weren't they able to do this? Why couldn't they take this in-house knowledge, this in-house expertise on AI, and really put that in, transform that into a marketable setup more quickly than a startup? Now, if you go back and say, well, that's sort of the nature of startups, right? The incumbents get beat out by the startups. And now you wouldn't think of Google as an incumbent, but certainly at this point it is. In the history of Google, you would say it's a startup. But it's no longer in the startup category. It is a massive company. Maybe it's really challenging for them to, innovate at the same rate as a smaller company, which OpenAI was at the time, and still is, but has become much larger over the course of the last couple of years. And, they've done some funding rounds, nowhere near the size of Google, of course. All right, so the management seems like they're doing a reasonably good job. You've had kind of a shift over time from the founders to Eric Schmidt, back to one of the founders, Larry Page, and now to Sundar Pichai. And, we'll see how it works out. The focus on AI, what I would say here, and I would probably give management also a 7 at the moment, because I don't necessarily consider that they have the same level of urgency that they really need in this space. But we'll see. They don't seem to have the ability to transfer some of those really moonshot projects into proper businesses very quickly, and they haven't really done that. And it's still overly reliant on search as a main driver for revenue and growth. So all that said, I'd probably give that a 7. Again, reasonably good management, but I wouldn't say overly impressive management at the moment. No disrespect. All right, moving on to the valuation. So for this company, because it's a more mature company, I think we can use a price to earnings ratio here. And if you look at the PE right now, the forward, which is what we care about, what do we think is going to happen in the future? The forward is 21.5 times approximately. So this is certainly not a really high multiple for Google, and certainly not a high multiple for a tech company. And so when you look at sort of where the highs, what's the high been, you're talking like almost 60 times. And the lows 18. So these are not, this is a pretty wide gap, and we're much closer to, where the valuation has been on the low side versus the high side. The median is closer to 29 times. And so we're below the median. We're certainly well off the high, and we're actually closer into where the low was, which is back in 2022. So, you're definitely not trading at a premium. You're definitely, historically at a discount to where it's traded over the last 10 years. But, it could be deserved. And why this could be deserved is because people are concerned about the concentration, which we mentioned, in search that's driving their business, the ability or the inability in this case to get those really moonshot ideas out into proper businesses, the inability to take the AI that they were ahead on at one point and get that and monetize that before others, caught up very quickly. And you would have to say, if you're using the large language models, this is my estimation, opinion inserted here, is that if you're using, I would say that ChatGPT is still the leader in this when you're using these large language models. And I don't use them for every use case, and so I use them for my own research and other things. But when I interact with these models, and I try to use as many as I can, I would rate Gemini behind ChatGPT. Certainly the 01 and the 4.0, I would rate Gemini behind that. Another model that's coming on strong would be Grok 2 as an example. So there's competition in there, and Claude from Anthropic. And so, this is a competitive set that they have to work with. And so when you say, well, what is the proper evaluation for this company? You have to look at their competitive set. What's the competition looking like in their business? And has their margins eroded? Do they deserve a premium because they have a big moat around the business? It seems like possibly not. And when you look at this valuation, the market seems to think that. Otherwise, it would trade at a higher multiple. Again, it's closer to an all-time low than an all-time high, or even median. When you talk about the median is significantly higher than we are right now. So the market has their concerns, and the market is sometimes right and sometimes wrong. Over the long term, the market usually gets it right, by the way. In the short term, it's a voting machine, and in the long term, it's a weighing machine. Now, hard to know, is this a call on the valuation, a short-term phenomenon? Can Google get its, sort of act together around AI more quickly than it has in the past? And now with this sort of catalyst with ChatGPT in the focus, really start to turn that, those ideas that they have developed and, all the expertise that they had, collection of talent, and translate that into market cap, translate that into earnings, translate that into a higher multiple. Again, I think time will tell on that, but I think it's deserved that this multiple is here. But that makes it for a more favorable score because, okay, it's certainly, you're not paying up for this company at the moment relative to where it has been in the past. And so, again, right now, lower than it has been over time. So I'd probably give the valuation score something like a 7. And then when you talk about balance sheet, here's where you're going to get a 10. You're talking about a big pile of cash, $100 billion, 27 billion. But even if you make it, 27.8 billion in cash or net debt. And so you're talking about, just do round numbers, 70 billion plus of net cash on the balance sheet as of June 30. So this is going to help you sleep at night. And we talked about this before. You're generating 60 billion in free cash flow. So you're generating a lot of free cash. You have net cash on the balance sheet. And you could argue that they're going to need this cash. So one of the arguments is that, okay, why do they have so much cash? Well, if this AI cycle is going to be as competitive as we talked about, it will deserve big investments. And these companies are all making big investments in the billions of dollars for single companies, and you're talking trillions for the industry. And so for this upgrade to all their infrastructure, for Google Cloud to build these algorithms to make YouTube, which we didn't talk too much about, but YouTube is obviously a big property within that. And when I talk about YouTube, I include that in search. that is the number 2 search engine behind Google. And so, those are 1 and 2 for it. I should have called out a little bit more possibly on the business side, but super clear. And when you talk about search, you're talking about traditional search and YouTube, and they are dominant there. But again, people are concerned that is that over-reliance on those categories is the Achilles heel for Google. But back to the balance sheet. The balance sheet, you're talking 10 here. There are no concerns for the balance sheet for Google. Net cash, $70 billion, generating $60 billion. The only mild concern, but it's not a current concern, is how much of this cash are they going to need to deploy to, keep up with this AI arms race? It seems like they have enough, certainly, and they're generating enough. So for the moment, I think this is a 10. So now let's recap here, go through all the scores. You're talking, we've given mostly 7s here and a 10. So that kind of comes out depending on if you want to make some adjustments along the way. You're talking about, a 7.25 for the business, something like that, or 7.25 for everything when we talk about the composite score. But the business, again, I think it's a 7. I think the concerns around the over-reliance on search and on YouTube have come to the forefront right now, and people are worried about that. Can they make Gemini actually really be one of the next thing that really works for them and really integrate it to be a solution provider to make everybody more productive? Time will tell on that. They haven't been as quick to move. The sense of urgency needs to come back to Google, and we'll see if it does. But that's reflecting the valuation, what you get to. On the management side, you have a non-founder CEO there. Seems very capable, but not the same drive, let's say, as a Larry Page or even in early days Eric Schmidt when they're transforming the business. And so, can we see a bit more sense of urgency? 7 on that. And then you get to the price valuation, probably closer to, an 8 or something like that, because, you're not paying up for this. And then 10 on the balance sheet. So if you're talking, between a 7 and an 8, depending on how you really want to score each individual component. If I say 7, I said 7.25 before, but maybe call it a 7.5 and pick the middle there. But it's not a high score, right? For this great company that's super well known, you would think, possibly if you didn't go through each piece, that it would not be rated at a 7.5 or a 7.25. But I think there are legitimate concerns around the moat around the business. I think that's reflected in the valuation piece. You have a non-founder CEO that I don't think has the same level of urgency. It doesn't seem like it. Again, no disrespect, doing a good job, but I think needs to be a bigger sense of urgency on how they translate Gemini into products for the company's growth moving forward. And then no concerns in the balance sheet. So the collective there, again, between a 7 and an 8, 7.5 if you like, 7.25 if you like. But fantastic overall in our portfolio over the time that we've held it. But it really is a different time now. And it does require, like any other investment, that you look at it on a constant basis. Yesterday's wins don't take, are not today's wins. And so you really have to re-underwrite these things all the time. Businesses change, the dynamic changes, the market changes. So even for the same company, it has different management, it's in different businesses, it has different threats to their business, it has different advantages. And you have to reconsider those all the time. That's what we ask our analysts to do every semester, fall and spring, and every 15-week period. And I think that is one of the big advantages that we have at the GW Investment Institute, that our analysts change. For a lot of people, that's a disadvantage. In this way, it can be an advantage because we have a fresh set of eyes come in and look at this. And I think Google deserves a fresh look because it is in a different space. And I think the big catalyst was the change with ChatGPT and sort of the kickoff in the AI arms race. And so we'll continue to watch. I think, again, it's a good company. It's a solid company. We'll continue to re-underwrite all of our companies, including Google. That's a wrap for this show. So I want to thank everybody and all of our listeners. The call to action is, put it in our comments. Is there a company? Is there an idea that you would like us to look at? Please let us know. And with that, that's a wrap for Market News with Rodney Lake. See you in the next episode. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.